Hey everybody, Josh Sigurdson, a World Alternative Media here, and of course we're joined by author and economic analyst here at WAM, John Sneisen. And hey John, guess what?
No, what's that, Josh?
Deutsche Bank is doing terribly again. They kept talking about all this, we're restructuring, we're going to be okay, everything's going to be fine. They've been in a tailspin for over 10 years now, and their most recent news out of CNBC says this. Deutsche Bank posts net loss of 5.3 billion euros for 2019 amid major restructuring. And as the article goes into, Deutsche Bank on Thursday posted a full year net loss of 5.3 billion euros, $5.8 billion, amid a huge transformation project, the cost of which the German lender said is now 70% complete. Analysts had expected a 5.1 billion euro loss for the year, according to Reuters poll, while the fourth quarter net loss came in at 1.5 billion euros against expectations of 1 billion euros. The German lender announced in July that it would pull out of its global equity sales and trading operations, scale back its investment banking division, and cut 18,000 jobs in a bid to trim its adjusted cost base by 20% by 2022. The bank's common equity tier 1 ratio came in at 13.6%, unchanged from the fourth quarter of 2018 and up from 13.4% in the previous quarter, with Deutsche citing ahead of target risk-weighted asset reduction by the Capital Release Unit. Deutsche Bank Chief Financial Officer James von Moltke told CNBC Thursday that the lender was pleased with the momentum seen in the fourth quarter during the early stages of restructuring. Oh, these guys are delusional. And I quote, "It was gratifying to see that momentum supports our businesses and clients come back to the franchise," he told CNBC's Annette Weisbach. Our revenues in the investment bank were up 22% year on year, excluding specific items, which demonstrates that we also participated in the generally better conditions in the fourth quarter. In its earnings report Thursday morning, Deutsche Bank said the full year net loss was entirely driven by transformation-related effects. You mean like their failed attempt to merge with Commerzbank? Anyway, CEO Christian Soing said in a statement Thursday that the CET1 ratio, stabilizing revenues and cost discipline, meant the bank was confident that it can finance its transition with its own resources and return to growth. The bank attributed a 2.6 billion pre-tax loss to the absorption of transformation charges of 1.1 billion euros, goodwill impairments of 1 billion euros, and restructuring and severance expenses of 805 million euros. The full year loss additionally included transformation-related deferred tax asset valuation adjustments of 2.8 billion euros. Fixed income and currency, FIC, sales and trading revenues made a tentative comeback in the fourth quarter, posting revenues of 1.2 billion euros, up 31%. As it shows here, cost reduction. Deutsche said it had recognized 70% of the anticipated cumulative costs to achieve its transformation strategy between 2019 and 2022. It also reported that it had achieved the 2019 full-year adjusted cost target of 21.5 billion euros, excluding transformation charges and the fourth quarter expenses incurred by the transfer of the bank's prime finance platform to BNP Paribas. Group headcount was reduced by over 4,100 in 2019. So, John, I don't even know where to begin. We've been reporting on Deutsche Bank for many, many years now, and it's just one bad story after another, I find. I don't think we've ever seen like good news for Deutsche Bank. They keep saying that everything's all fine and dandy, but their shares have been plummeting nonstop. They keep saying that, these little adjustments are making everything better. They're going to save the bank. And yet, as like this Zero Hedge article says, negative rates are forcing German banks to hoard so much cash, they're running out of space. John, what's going on? What can you go into the latest news here regarding Deutsche Bank and what we can expect down the line from this just utter insanity?
Well, if you go and look at, they might be looking at their year-to-date share price chart, because that one actually looks pretty good. It looks like Deutsche Bank has gained some, but then if you go to the maximum and you take a quick look at that, the share price on November 1st of 1996 was 45 $0.44. Meanwhile, now it's just at $9.15. It's up, of course, from the $6 that it was all the way when it really should have collapsed. But, it keeps on getting propped up over there. Now the ECB is, of course, doing more of a quantitative easing over there in Europe and trying to prop up, dead banks like Deutsche Bank, Commerzbank. You got BNP Paribas, Societe Generale. All these banks are, failing. Of course, Deutsche Bank is the worst. It has a derivative book of $43 trillion still. I looked at just a recent one for my big report that I'm putting out. And they still were at that number. They actually have a tremendous amount of what's called cash or equivalents on their balance sheet. But that doesn't necessarily mean that all of that is cash. Now, more of it might be common cash, because to hold cash is better than having negative interest rates, because actually not too much so better, because they're actually destroying the purchasing power of the euro on top of that. So I would rather a gold, but over in Switzerland they have negative interest rates there. Massive amounts of people have been hoarding cash out of the banking system, where it doesn't really lose anything per se. It's still losing to inflation, but that nobody thinks about that. But the problem here is, of course, that Deutsche Bank, has been in this restructuring mode now for over a year almost, and they're still not, they're extremely dysfunctional bank. And as I said, their share price is at 9.15 versus 44 back in the late 90s. And then when you go and look at banks like JP Morgan, for example, JP Morgan is at record highs of their share price. They just passed a little bit above their 2008 price. So you're seeing Deutsche Bank down there, worth nearly nothing. And of course, their market cap, Josh, is 18.6 billion. And that means that they basically lost 33.3% of their market cap in a loss on their balance sheet, which is insane.
That's a third of their money.
Yeah, well, it's a third of the market cap of the share, not necessarily their balance sheet. But again, it just shows you the proportionate, how bad, and $6 billion is not little money. That's bigger than some countries almost that you've seen around the world. So Deutsche Bank has some serious problems coming forth over the next couple of years here. And of course, I think it's not even years. I think 2020 looks like it's going to be a year of huge turmoil. Now, of course, they're blaming the coronavirus on these, massive pullback in share prices. I think it's another virus that's out there that's way worse than the coronavirus, and it's the debt virus. That is what's was strangling, killing off the economy one by one.
And John, I think that debt virus has probably killed a lot more people over time than almost any ailment, really, any plague. Look, we're talking billions of dollars here, and remember, Deutsche Bank. You've analyzed the balance sheets of countless banks, John, throughout the world, in Canada, the United States, Europe, and in so many places. And what you found, it was about a year and a half ago, 2 years ago now. You found on the balance sheets the cash to deposit ratio for most of these banks basically showed that most of these banks, major banks, are bankrupt. We're talking sometimes under 1% of deposits covered in cash.
Yeah, and what's fun with that? It's not even cash. The problem is it's cash and equivalents. So what you're seeing is actually equivalents means deposits at the central bank. But most, it says that it could be gold, silver, gold, cash, and so on. But most of that is just electronic money that has been used to bail out these banks, and it's held at the central bank in order to keep some kind of order in those banks. But a recent report that I did, of course, I looked into the numbers. They actually got slightly better for some banks, but the problem is it's so it's not even cash to deposit ratio anymore. The problem is that they started to calculate for, M0 used to be cash and coins in circulation. Well, now the problem is it's become, they have added on excessive reserves at the central bank, which is their deposits there. And the problem with that is most of that is electronic. So you don't really see how much cash these guys have on their balance sheets at all. And so I believe that, there's very little. I heard a guy, he went to TD Bank here, and he tried to take out, I think, like, was it $25 bills, and they had issues with that, coughing up the $5 bills.
Yeah, well, I mean, we're at in a period of time now, John, where, I mean, interest rates look to be going negative almost across the board everywhere. And obviously banks are bankrupt. And, you know, people have blamed the last recession, which I don't think ever ended. I think it's just a prolonged, papered over recession. But people blamed the last recession on the insolvency and bankruptcy of the big banks and all that kind of stuff. Well, what has changed? I mean, just magic, you know, nice headlines, you know, waving a wand and saying all is well and just debt for everyone. I mean, it's so crazy, John. Where do you think, I mean, Deutsche Bank, among many other banks, I mean, a lot of the bigger banks that appear to be on paper doing better are actually, they have worse cash deposit so-called ratios than, you know, Deutsche Bank. Where do you see this whole banking system going in the next little while? Because it's just amazing that it's still standing on any legs at all, to you know, as we see it today.
Yeah, well, what you're seeing is, I don't know what the zombie virus is that, you know, these dares were getting. I heard some rumors about dares getting this like many years ago, that they almost turn into zombies. Well, what is happening is that the world is infected. The whole banking and world, actually, monetary system is infected with a horrendous debt virus. And this debt virus is turning everybody into zombies.
Well, you know what that is, John? That's a parasite. And a parasite can take over the brain of a mouse and cause it to walk around and move around after it's dead. I think that might just be what we're seeing here. A parasitic creature, a behemoth of all parasites. Well, we've never seen a parasite this big.
Well, yeah, and it spread so wide that, you know, 40% of corporations in the United States is zombie corporations. You got almost 80% of corporations in Canada is zombie corporations. Most governments are zombie governments. And you know, with zombie, I mean that they can only pay interest on their debt. They can't even pay down the premium. So they're not even paying down their debt ever, because they can't, because they're dead and they're on life support by the central banks. You know, now they're doing the repo interventions and quantitative easing. For those out there that say that the central bank is not doing quantitative easing, what is it buying treasuries and buying mortgage-backed securities straight off the banks? That is quantitative easing, you morons.
And then they call people QE conspiracists for making an obvious economic analysis of it.
Yeah, and what's funny is that they talk about a lot of people don't understand what the repo interventions and all that is. That is just basically an overnight bailout every time. But what happened was that they had to roll over that debt. They actually went into term debt because probably that debt couldn't get paid off, so they had to go longer terms on that debt than overnight. And then they also did monthly terms on that repo intervention. So even that, you know, has gone to a place where there's basically quantitative easing. But they're also buying. My report that I just put out, Josh, actually, you have in the report, I think it's $115 billion that they bought in treasuries and in mortgage-backed securities. So that is the definition of quantitative easing.
But John, what happened? Yeah. I thought it was all temporary. It was just going to go on until January. Now it says April. Surely they mean just April.
Yeah, and now it's all about liquidity. You know, there's how they measure liquidity is how much money can central banks pump into the system. It's just become so ridiculous, and everything is, you know, on definite life support. And there's also correlations. I don't have the chart in front of me, but another guy, the Money GPS, he's a Torontonian YouTuber. He just showed, you know, the how repo overnight, every morning after the overnight intervention, you know, the stock markets goes up because it gets a boost from this repo intervention by the central bank. So it's just purely blatantly manipulated on all fronts now. And there's literally like, and everybody is in this euphoria that, oh, the stock market can't go down. Well, now you're seeing the issue that it is going down. They're blaming the coronavirus. But I think it's the debt virus that is really pushing markets down.
Right.
And that's what's going on.
And at the end of the day, we could see it pushed up a lot more even. It's amazing. It's all just magic wands being used here, and none of it benefits the average person at the end of the day. It's going to all come down on our heads. With that said, John, we're going to start to wrap it up. But I wanted to hear your bottom line going forward here, because we've been reporting on Deutsche Bank for years now, and reporting on their downgrading by the S&P. We've reported on them having to redo their living will test. We were reporting when their derivative exposure was at $75 trillion. trillion, which is the GDP of the world. I mean, this is why is this bank even around anymore? It's just so crazy. But what's your bottom line on this report as going forward for those watching?
Well, I think the bottom line is everybody needs to understand what's going on in the current system, and everybody believes that there is a constant inflow of capital. Actually, the idiots, as they're called, the general public has been flowing into stock markets right now, which is just a advertisement that we have this debt bubble. So people really need to understand where the risks are. And I believe there's some tremendous risks out there in debt, and the biggest one is the corporate bond market. But on top of that, we talk about the derivative book of Deutsche Bank. There is now 5 times more collateralized loan obligations that are outstanding than CDOs back when the whole market collapsed. And if you want to know all of this stuff, I highly suggest you go to my website, which is theeconomictruth.org. I have the global risk report for 2020 that I put up. It's a lot of work. It's been 3 months in the making, and I have it there. So, but if you use the code TET, you will actually get 75% off. So like about $24 something on this report that I have out there for $99.
Wow,
but yeah,
well,
so you
remember,
need
guys,
to,
that's TET, not TIT. Anyway, John, going forward here, there's so much coming up on the horizon. We'll be reporting on lots of stuff. I mean, it's just every day I open, say, Zero Hedge, or I check out the mainstream, I look at CNBC or whatever, and it's just like one money story after another. It's almost impossible to wrap up, because the second you start reporting on one, there's something else hitting you, sideswiping you essentially. And this is just more reason why you, the viewer, have to be prepared and, be self-sustainable and responsible. I've been saying it for years, and I'll continue saying it. The most important thing is for you to take control of your own life, you to be responsible, you to have control over your own money, your own wealth, and your own future, and your own freedom. And I mean, it really comes down to you. No one's going to help you. And I mean, the few that might help you are few and far between. At the end of the day, the banks want you in debt, because that means that you're a debt slave. You're more easily able to be controlled. You're more desperate. The government loves the same thing. And you got to disobey this slave racket.
Don't participate in the Ponzi scheme, you morons. Get out.
Yeah, of course we're not calling the people that have watched up to this point of the video morons, but anyway.
No, it's just me just having a little bit of fun here. Yeah.
Excuse him, he's a Norwegian. So as always, food, water, shelter, self-defense. You're not gathering things for the toughest guy on the block. Gold and silver as wealth insurance, not investment advice, but just look at history. It tells you all you really need to know. And then at the same time, there's cryptocurrencies that are properly decentralized, fundamentally useful. And going into the future, we will see this grow and grow and grow. And as we're seeing all this turmoil, from war to virus to all these other things hitting us. From one end and another, we're seeing a lot of people flood into gold and silver. We're seeing a lot of people flood into cryptocurrencies, and that should tell you all you really need to know about safe haven assets. Anyway, I really appreciate you joining.
Yeah, sorry, just to interrupt you. Well, just one more thing. Just remember to join me and Tim's Discord channel as well, where we share a ton of articles. We share all the news that's happening. So make sure you follow that as well, on top of watching all the great videos that Josh and everybody puts out there on World Alternative Media. Sorry, I had to interrupt you there.
Yeah, absolutely. Well, and as always, check those links below, guys. We've got GoFundMe, Patreon, subscribe, star, crypto addresses, all that kind of stuff. Help keep us alive, because as Susan Woznicki, the CEO of YouTube, says, she was proud to have cut down viewership on so-called controversial content by 70% since last January. And we've been talking about it since last January, because it happened overnight. We were seeing an average of 40,000 views per video, dropped to 4,000. And now we're watching a video get 500 views in the first 5 minutes. And then 3 hours later, it has 1,200 views. I mean, we're getting shadow banned to death. So we need you to share this on social media. We need to press like. We need you to comment below "End the Fed," as well as just let us know what you think of this video and this news, because there's so much happening in the world and it's hard to stay on top of all of it, but we're doing our best here at WHAM to bring you up-to-date information on news from all over the world, all sorts of different topics, all at the same time. So we really appreciate all of that. Join us on float.app, flote.app. And anyway, I really appreciate you joining us today, John. And until next time, this is Josh Sigurdson and John Sneisen signing out from World Alternative Media. Find the truth. Be the change. Like what you see here at WHAM, don't forget to check the links below. GoFundMe, Patreon. We cannot do it without you guys. Every donation is extremely, extremely appreciated, as we're getting incredibly shadow banned. We've lost 80% of our audience since January of 2019 and counting. They are ripping us apart here on YouTube, and the only thing we could do in the meantime as we prepare for the next big step is to ask for help from the viewers that support our free information that we try to post on a daily basis. You can also find us on Subscribestar, where just $1 a month, that's all it takes, $1 a month is all it takes to truly make a huge difference. If everyone gave $1 a month, it would change everything for independent media, and we could win this information war, and we can defeat the mainstream medias eventually. And of course, on Subscribestar, we post subscriber-only content that you'll only see on Subscribestar. So make sure to pledge there, become a patron. That makes a huge difference, guys. And also, don't forget to check out our Bitcoin address below in the comments and description, as well as on the screen for you to scan, if you please. And also, don't forget to subscribe to us on the alternatives. We will likely be deleted by YouTube in the next 2 years. It's already happening on a vast scale. So make sure to find us on float.app. That's flote.app. At Josh Sigurdson, as well as at WHAM, W-A-M. Float.app is replacing every social media, and I mean, it's just incredible the opportunities it provides for not just creators, but for the average person who wants to get away from these nannies telling them what they can or cannot see. They plan to replace Facebook, Twitter, YouTube, Twitch, Tumblr, Reddit, and Patreon. You could subscribe to us on Float and pledge with cryptocurrency. It's really innovative. We are also on BitChute at World Alternative Media, as well as so many others, Minds, PocketNet. You can find us at World Alternative Media on Instagram. There's many options. And finally, don't forget to join us at Anarchapulco 2020, the famous event, the best liberty event known to mankind, other than perhaps Anarcho Vegas 2020. There are 2 major events coming up that we are extremely excited about, and you can use promo code WHAM, that's W-A-M, and save 10% on your tickets to these legendary conferences. There's so many amazing people speaking there. You won't want to miss it. So make sure to support in any way you can, even if it's just sharing our videos, pressing like, pressing to be notified. Anything helps, folks. You are the change you wish to see. Thanks for watching, everyone. And until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth. Be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.